Well, yeah, tariffs, they're probably impacted less than most retailers, actually. And so, in that sense, they're better off on a relative basis. Remember, about two-thirds of their business is grocery, or at least 60%, not really subject to tariffs. All that is sourced domestically. So, a relatively small percent of their sales versus other retailers actually comes from overseas, and specifically tariff related nations. And then the product that is tariffed, remember, Walmart pushes a big pencil. They're the biggest retailer in the world. So whatever the tariff dollars are is going to be shared by the brand, by the manufacturer, by the import, some by the retailer, and also some by the customer. But given Walmart's competitive position and their size and their scale, we think they have a better chance than most to push it back down the supply chain, or up the supply chain, I should say, to the vendors and manufacturers. So sure, some prices might go up and one's going to be impacted, but we think Walmart will be impacted less so. In that sense, it's kind of an advantage. It could enable them to take market share if their prices go up less than other retailers.
All right, so I hear what you're saying, Mike. You're saying that, look, Walmart is much better insulated than a lot of other retailers simply because they're stocking less stuff that actually originates from China. I've seen some numbers, though, that suggest that 60 to 70% of the stock on shelves in Walmart comes from China. Your numbers are obviously less aggressive?
Yeah, I don't think that's right. 60% of the business is grocery related, and most of that is domestically sourced. So that seems a little bit high to me. I do think it's somewhat or meaningfully less than that. And again, all that won't be tariffed, and what is tariffed, we think some of that can be pushed back on the manufacturer and vendor anyway.
All right, so 86.60, we're past that 85 target of yours. I know it's under review, but suffice it to say, I mean, hazard best guess, it's going up.
Well, I'll say this. Costco's trading at more than 50 times earnings. Walmart has gotten more expensive than it has been in the past, but is closer to 30 times earnings. Why can't Walmart trade at a similar, maybe not exactly in line with Costco, but at least in that direction? They're really hitting on all cylinders. They're taking market share, yet they're growing their margins faster than their sales. They're having success in their quote-unquote alternative businesses, which are higher margin, things like their third-party marketplace, things like advertising. So as long as they continue to take market share and grow their margins faster than sales, we don't see why that multiple can't continue to go up.